Good morning, everybody. This is Alex Kazmark. Today is Thursday, March 10th, and this is the G7 Outlook, which is good for the next 12 to 24 hours and is intended for analysis purposes only. We're going to jump right into it. Currently looking at the euro dollar on the daily, trading at 139.20. The move has now come under a bit of a retracement. Markets retraced 61.8%, right back to the previous area of resistance, just above the 138.50 level. We're going to be looking for one more move in favor of the euro to the upside, not breaking 142. It's going to be important there that we stay below that last pivot, important pivot high. We're going to see the market fail around between 140 and 142, and then we should see some strong movement in favor of the dollar. Looking at the pound, dollar trading at 162.09. Once again, we saw the market retrace, very similar to as to the euro, 61.8% retracement. Perhaps still trading here in favor of the pound. Upward sloping trend line still supporting movement in favor of the pound. We haven't been able to clear 163 with too much certainty, so we're looking for a failure, and eventually we're looking for a move below 160.30. It's going to be important there that we note that 160.30 price. That should confirm a trend change and then move to continue back down towards the 153 level. Again, as of now, either we're looking for a long position back up to 163.50, perhaps a bit higher, or we're looking for a break of, first of all, this 161 area, the previous pivot low a couple of days ago, and then going back into 2 weeks ago back to the 160.30 level. Once we see a break of that, that should be a confirmation of a trend change, and we should see a movement in favor of the dollar to continue. Looking at dollar Swissy trading at 92.93. Swissy continues to gain ground, though slowly we've broken below this upward sloping trend line. We were hoping to stay above that 93.80 level and then continue trading higher towards parity above 97.70. We weren't able to clear that level and continue trading to the downside, setting a low near the 92.20 level. Now we began some consolidation. As you can see, if we look at this downward sloping trend line, we're just near that level now, around 93.80 as the top. We're going to be looking for a move to continue up towards 94.50, at which point we'll look to reanalyze the market, and then we'll look for a potential long opportunity once things in the Middle East settle down. Looking at the dollar yen, trading at 82.72, upward sloping trend line, still supporting price around the 81.80 level. We're looking for continuation higher. Question right now is whether or not this is going to be the Fibonacci retracement of this recent move lower, currently around 50%. We did see the market trade up to the 61.8% retracement level a few days ago, up to the 83.15 level. That level failed, traded a little bit lower, still consolidating here, and then we're looking for a move above 83.20 to continue up to the 84 level, at which point if that pivot breaks, then we should see continuation above 84.50. On the other hand, if the market continues to gain strength in favor of the yen, we'll look for a break of 81.50, previous pivot low, and continuation on lower. Dollar CAD trading at 96.86 continues to trade lower. We're holding position for the long term. Right now we're going to be looking for a move back up to the 98.50 level, previous area of support, may now turn into resistance on the move higher. At this point, we're standing aside, looking for continuation to the downside, at least until we see some lows set place again. Nothing fantastic, but a very slow movement down with quite a bit of impulse action every once in a while. So we'll see what happens here over the next few days regarding oil and the crisis currently in the Middle East. Kiwi dollar. We've had quite a bit of negative data coming out of Australia and New Zealand. RBNZ cutting interest rates by 0.5%. Expectations were of a cut of 0.25%. Expectations were blown out of the water. We saw 0.5% decrease, and yet the market rejected the move to the downside towards the 73.30 level and has now bounced back, trading at 73.70. Similar with the Aussie dollar following employment data along with building approvals earlier in the week. Worse than expected data by far, and initially seeing the Aussie sell off towards 10060 before bouncing back above 101. Again, the move there may have been due to the change in employment. There were a lot of losses on the part-time side and quite a big increase in full-time employment. So we'll see if that is a reflection of current fundamentals or if that is something that will range over the next few months. At this point, we are looking still to stay below 102, looking for a break below this upward sloping trend line and move below parity for continuation on down to the 98 level, and then over the next couple of months even further down, potentially back down towards the 92-94 cent level. At this point, market hasn't been able to stay above 102 with worse than expected fundamental data coming out of Australia. At this point, this may be a good area to get short a little bit of a position, that something that we can build on for a fall towards the 94 cent level. And a quick move back on the Kiwi. We want to focus on this 73.40 level. Quite a bit of support here going back to December of 2010. And we're going to be looking for potential move higher. If this trend line breaks, we're going to be looking for a move up to 74.80, potentially 75.50, watching for this pivot high to stay intact, and then for a move eventually below 73.30 on down to 70 cents. Thanks for watching. This has been the G7 and 7 chart update.